in the heart of the financial district of Dubai, and I'm here to speak to the head of one of the biggest private equity funds investing in Africa, a man known in the financial world simply as Shankar. Thank you very much for joining us.
Thank you, Chris.
You're a career lifelong banker. Just tell me a little bit about your upbringing. You grew up in Chennai, in South India, but your father was a police officer, and you said he was a great influence on you when you were very young.
Because he forced me to read a lot. So my love of poetry or the English language or English classics was pretty much ingrained early on. And I think it stood me in good stead later on.
How did that love of poetry lead you to the banking world?
There's no direct correlation to that because, frankly, I did my undergrad in physics and maths and chemistry and then went on to get an MBA and then joined banking. The reason I joined banking was because it was the best paid job in India those days. I mean, nothing more spectacular than that. Did I ever feel that I would end up on the board of an international bank? No. I was happy to get the money that I was getting in a foreign bank. That was it.
And at the time, any poets that inspired you on when you were starting your banking career?
I mean, you would have the usual list of Shelley and Keats and Yeats and Shakespeare and Milton, the whole lot, yeah.
And when you started out, how did you, what was the first rung on the banking ladder for you?
I started off as a management trainee straight out of MBA school, and then I stayed in banking for close to 35 years. 20 years roughly with Bank of America, which was a fantastic training ground, and I think I owe a lot to that institution. And then about 14, 15 years with Standard Chartered Bank, where I finished my banking career. But Bank of America was great from multiple perspectives. Number one, it was not a seniority-based organization. It was very much of a meritocracy. Second, they were colorblind. I mean, they didn't really care whether you were brown, white, black. It really didn't matter. As long as you were competent, you got the opportunity. And the third great thing about them was, here I was, joined the bank in India, and I was not alone. Many of us got positions overseas, and in fairly positions of increasing and senior responsibility, which gave you the chance to prove yourself on an international stage. So I owe a lot to Bank of America.
And also it took you all over the world. Where did you get to work during that time?
So I worked in Asia, I worked in United States of America, and then, of course, later on with my role, obviously I operated across pretty much most parts of the world. I had responsibilities, I would say, most parts of the world.
And you were working in Asia at the time of the 1998 Asian Tigers crash. Just give us a taste of what it was like to be there in the eye of that storm. You were in Hong Kong, I understand, at the time.
I was in Hong Kong at that time. I used to be the CEO of Bank of America Asia. I also used to run the investment bank for Asia Pac. And then all hell broke loose. Here was the Asian economies turbocharging, and the tigers, the dragons, the elephants, whatever you want to call, and then the party crashed. Essentially, if you just go back at that time, all it required was, by some estimates, about $100 billion of foreign capital to be withdrawn from the markets of Thailand, Indonesia, and Korea to trigger the crisis. And when you thought things had really bottomed, guess what? It went even worse. And there was no bottom, frankly, at the end of the day. If I were to take away some lessons from that crisis, one, prepare for the worst. Second, it really differentiated the winners from the losers, people who had a competitive, sustainable advantage in their businesses. Third, there were some good actors and bad actors. Some people who, even in the darkest hour, repaid their obligations, and some who didn't, who could afford to pay. So it was about a test of character and will, not just ability to pay, but also willingness to repay. And then on a broader macroeconomic perspective, the countries that got impacted the most were people like Thailand, Indonesia, and Korea, which were open to foreign capital, but didn't quite have all the buffers around themselves in terms of the governance and all the structural adjustments. Whereas countries like China and India, which were completely closed to foreign capital, ended that crisis not too badly. And then, interestingly, Malaysia, which got into a crisis, pretty much ignored all the advice from Western economists and the IMF under Dr. Mahathir Mohamad, who's in his first innings as Prime Minister, and actually rebounded the fastest.
Is there any particular image in the lessons we learned that lives with you to this day that you saw during those desperate days of 1998?
Riots in places like Jakarta, when ill-advised measures to remove fuel subsidy just as people's incomes were declining. That's the enduring image you have. And equally, the fantastic amount of recovery which happened post that. Because if we just look at today, most countries build massive foreign exchange reserves, particularly in Asia. And I think that was an outcome of the crisis. They learned their lesson.
Talking about learning lessons, you also lived through the 2008 global crisis. And you're saying that because the problem is with all the economies of the world are so interlocked now. When one sneezes, another one gets a cold. Did you see it coming, 2008? A lot of people didn't.
I didn't. You're always talking about asset bubble building up. And you always talked about very risky forms of financing, high leverage on transactions. Lots of people who shouldn't be getting loans were getting loans. And a lot of financial alchemy and engineering was going on with disregard for the basics. All those things were building up. But did anyone exactly, precisely predict the crash? The answer is no. But again, we call it a global financial crisis, but I would just like to highlight that it was very much a Western banking crisis. The crisis didn't impact Asian financial institutions just as much as they did the Western financial institutions. But your broader point about contagion risk, you go back you talk about crisis, you talk about 1987, the Black Friday, the Dow crashed. I was in India running the corporate investment bank in Bombay for Bank of America. I don't think the Indian stock market even moved 0.1% either way. Today, if that were to happen, you would have impact in most global financial markets. We are far more interconnected today.
And we're talking about lessons here as a banker. I mean, after the 2008 crisis and the bloodbath that ensued, a lot of banks, this new compliance, this Basel II, Basel III, saying that they were never going to get caught again. They were always going to have enough capital in the reserve. And yet here we are, 2019, a lot of financial institutions are still struggling. Do you think enough lessons have been learned?
Maybe it's not just a question of whether the lessons been learned. Sometimes the wrong lessons been learned. Banks today are far more capitalized than before the GFC. Now, obviously, if banks are far more capitalized, means that they're lending less. So is there enough financing available today to companies that need to borrow? Probably not. With low interest rates, are savers being disadvantaged? Probably yes. And yet there seems to be, barring a few places like United States being the exception or India being the exception, is there enough confidence for people and entrepreneurs to borrow even at these low interest rates and invest? Actual capital formation doesn't seem to be that robust. And a lot of the stock market bumps, even in some of the Western markets, have happened on the back of stock buybacks and other forms of financial engineering rather than true economic activity. That's what I think we need to be concerned about. And we talk always about Africa, and I know you work very much there. If you just look at the size of the financial system in Africa and most markets, South Africa excluded, the banking system is too small. The savings rate is so low to finance the growth that Africa needs.
Because that's one of the issues we're going to talk about in the second half. I mean, one of the complaints that a lot of entrepreneurs have to me when they go to the banks in their hometown to raise cash, there's not enough between all of them for one project, and they have to look elsewhere, unfortunately. How can this situation ever be turned around from a banking perspective?
Let me just give one factoid. If you take the aggregate market capitalization of all the banks in Nigeria, it's under $8 billion as of last month. And that's less than, say, 2% of the economy. And in the same place, a gentleman like Aliko Dangote is setting up a refinery which is north of $10 billion. Therein lies the paradox.
Indeed. Well, he's got a lot of outside investors, presumably.
Absolutely, absolutely. He has access to financing. So how do you correlate this? Here is one entrepreneur setting up a project, just one project, the refinery project, north of 10 billion, and then add the fertilizer and the cement and everything else. And your entire banking system, aggregate market cap is 8 billion, right? There's something wrong. Also, if you just take another factoid, 8 billion aggregate market cap of the Nigerian banks is less than 1/10 of the market cap of the largest private sector bank in India. So we need a functioning banking system in not just Nigeria, but I think that applies to large swaths of the continent, South Africa being the exception.
And what about the robustness of banking institutions in Africa, particularly South Africa? I mean, the Reserve Bank Governor, Tito Mboweni, once told me that the instruments, the debt instruments that were being used before 2008, they were introduced or tried to be introduced to South Africa. He said, I didn't understand them, so I didn't let them come in. And luckily, South Africa seemed to survive to an extent the global financial crisis. But do you think that the banking's robust enough in the continent? Do you think there's enough regulation?
I think South Africa is clearly very well managed. The SARB has always done a fantastic role. It's a conservative and tough regulator. And in a funny sort of way, if you just look at South Africa, Australia, Canada, they have one similarity, that it's a four-handed market. Four banks controls between, let's say, 80 to 90% of the banking system, whichever way you measure it, right? And all those economies have benefited from a solid, big banks. Now, is that whole true for every single African economy? The answer is no. And the other challenge is Africa has, if you look at the savings to GDP ratio, it's less than 15%, 1.5. If you take China, that's north of 40, it's close to 45. So China can finance a lot of its development needs. It's from its own national and internal savings, whereas Africa can't. As you and I know, Africa needs a hell of a lot more investment into infrastructure and whichever way you take, agriculture, resources, and everything else. It requires a lot more foreign investment.
Now, you're one of the biggest private equity firms here in Dubai investing in Africa at the moment. Just to give you some of the numbers you've given me, $757 million, of which 40% goes to the African continent. What do you think at the moment is something that Africa can hold on to? Because I know there's a lot of pessimism kicking around at the moment. Nigeria and South Africa, the two biggest of the economies. What are you seeing yourself as a major investor?
First of all, I think if you look at the broad opportunity in Africa, I think I would say it's driven by a young, growing population. The demographics exceptionally attractive in Africa. Second, it's also rapidly urbanizing, which means that the types of things that people will need, consume, are going to be quite different. And there's a dramatic shift in productivity as well. And then with rising per capita incomes, we should expect an increase in consumption. And we've seen this story everywhere. When people move from necessities and basics, and then they can move to more affordable luxury or the more than just the basic essentials, you'll have a major shift, positive shift in consumption. So demographics, urbanization, rise in per capita income, and so where do we see the growth? We see everything from the consumer sector, consumption, to agriculture, 60% of the world's uncultivated arable land being in Africa. See also immense need for infrastructure. There is probably an infrastructure gap of somewhere close to $50 to $60 billion a year, at least for the next 15, 20 years. And then, of course, the resources sector. So we see a broad opportunity across the continent.
In terms of resources, whereabouts are you looking in mining at the moment? Because South Africa seems to be struggling with its regulation still slightly. It's struggling with low productivity and the contraction of mining. Just in the last few days, there's been thousands of job losses that have been announced. Where are you seeing the opportunities in mining in the continent?
We don't specifically focus on any sectors. We have looked at mining. Nothing as of yet has looked remarkably attractive for us on the balance of risk versus reward. But broadly on resources, what is quite attractive is the oil and gas sector, particularly as some of the multinationals sell their assets to local entrepreneurs. And what we have seen as a trend is when the locals buy some of those assets, actually the production goes up dramatically. They are able to extract far more efficiencies and production from the same asset. So we see some possibilities there.
What about oil and gas and the Rovuma Basin off Mozambique? There's been a lot of store set by investors. Are you looking at that area?
Not specifically, but one of our portfolio companies, interestingly, is a property developer that we have seeded. Is a platform. It's called Gateway Delta, where we are partnered with the PIC, the Sovereign Wealth Fund of South Africa, Grit of South Africa, and Prudential of US to establish a company which is going to develop built to specifications properties. And that's actually benefiting a lot from what you're talking about, because we are doing projects for people like Halliburton, for example, because they need places to live, work, and play. They need warehouses. And so that plays to the advantage of our property development company.
Actually, I say you're probably more optimistic than some of the investors I've talked to in recent years. But
I'll tell you why, because if you just look at the risk versus reward, I think the Western or the outside perception of risk in Africa is high versus what you can make as the reward. So for us, it's actually good for people who have been there, been a while, been close to the coal face, and can look at the trade-off between risk and reward. We think it's a great place to invest, but it's not for everybody. Not for everybody.
But speaking of which, you were telling me before the interview that you're estimating dollar terms a return of about 16% at the moment, and that would be far larger than you might get if you put it into a bank right now.
On the fund itself, by the time that on Fund 1, we would expect to generate returns, not just in Africa, but across the portfolio of closer to 20% IRR.
And you say that you're going for companies with strong cash flow already established with a regional footprint. Whereabouts are you looking at in the next few months or so?
So in Africa, if we just look at our strategy, outside of South Africa and Nigeria, the economies don't quite have the scale. And we like to invest, as a $750 million fund, we like to do slightly bigger tickets. So we need to invest in companies that have size and scale, which in the African context means investing in companies which are regional or multi-country, which is why we've invested in Dangote Cement, the largest cement manufacturer on the continent, 45 million tons, absolutely a market leader. We've invested in Liquid Telecom, again, the largest optic fiber network and data center network in Africa. We operate across 15 countries. So it's the consistency is in that theme. Invest in players which are market leaders, which produce goods and services that is required by the vast population, the basic needs, whether it's cement or data, which is what ultimately Liquid Telecom is playing on. And then invest in companies that are capable of being listed on an international stock exchange, which means that the management of the entrepreneur needs to have the intestinal fortitude to live with the governance that comes with an international listing.
Now, it also leads me smartly to a couple of your maxims. You said cement, not caviar, biscuits, not Bitcoin. A lot of people are still talking about the idea that people should be investing in Bitcoin. It's one of the future ways to riches in Africa. What's your view as an investor and ex-banker?
avoid Bitcoin. I don't see the value in it. First of all, if it's a currency, it shouldn't fluctuate that much. Anything which fluctuates 50, 60, 70% is hardly considered a currency as a store of value. Second, it is too tedious to transact in Bitcoin. I don't see what exactly it does other than afford possibilities of speculation or for doing trade in drugs.
So,
however, the underlying technology which goes behind it may have very valid reasons for it. But that's besides the point. I'm just talking about Bitcoin or any of its other compatriots as currencies.
And as the continent still, African continent is struggling for growth. In South Africa, as you know, it's less than 1% at the moment. In fact, the economy contracted in the first quarter. How does that leave you as a foreign investor? Are you looking at other economies more robust maybe than the big ones?
If you take, of course, South Africa has been disappointing, but I am optimistic that under President Ramaphosa, hopefully South Africa would get back on track and make up for some lost years. If you just look at the story of Africa, it has been so much dependent on commodity prices, whether it's oil or minerals. The fundamental challenge has been that there's not enough intra-Africa trade. Less than 15% of total African trade is intra-Africa. The more you can do that, it's going to be better. Also, manufacturing as a percentage of GDP has declined in virtually every African country. It's less than 15% again. More you can do in manufacturing, it's going to be better because that's going to create the jobs. I mean, about 12 to 13 million Africans come to the job market every year. Where are you going to find the jobs? It has to be in agriculture. It has to be through manufacturing. And then, we also need to talk about energy, because without energy, you're not going to have manufacturing.
And what about this African free trade area? I mean, right, then it may yet be a number of years away, but certainly it's heading in the right direction in terms of catching up with Asia, which is well ahead in terms of intercontinental trade. What are your hopes for it?
First of all, I think it's a fantastic move. I think it's absolutely required. I mean, just look at the numbers in terms of 15% versus Asia being close to 50% in terms of intra-Asian trade. Absolutely required. I hope more people get. Now the challenge is the doing. It's executing on it and sticking to a firm agenda. But it's absolutely required.
In light of what happened with Braj Capital, do you think it's tainted the private equity industry at all?
In the Middle East, clearly Abraj was a big player, and what's happened is terrible. But I think the smart investors, professional investors, will realize that this is an aberration. It's an idiosyncratic event, and one swallow does not make a summer. And hopefully, I think what should happen and will happen is that in future, when LPs look at investing into a private equity fund, Gateway included, they will do their due diligence a lot more. They will look under the hood a lot more, and they will sift the chaff from the wheat. And I think it's going to be long-term positive, but sometimes you need these short-term hard lessons to get things going properly.
So I asked you earlier in the interview about your father. You said he was a police officer. You didn't follow him, and you said that he wanted you to join the Foreign Service.
Right.
Is that right?
Absolutely. But any event, I mean, by the time I graduated, it was not quite attractive. The Indian government service was not quite attractive, and I entered the world of finance. And I think I made the absolute right decision.
And now, fast forward, your son, he obviously grew up in the house of a banker, but he didn't show any interest at all in following you.
No, he didn't. I mean, although he graduated from Northwestern and he's very numerate and very financially literate, his passion, his calling was more the world of entertainment. So he's in Hollywood. He produces, occasionally directs, and occasionally acts. So he produces. He's produced a lot of films, the regular films. But more recently, he is more working with people like Netflix on animation.
So which films did he produce?
The famous ones which were big hits was one was The Grey with Liam Neeson, and another one was The Lone Survivor with Mark Wahlberg. Then he did stuff with Brad Pitt and Russell, which was Killing Them Softly. So he's done a bunch of stuff. But more recently, he has been attached with Castlevania, which has done very well as an animation series on Netflix.
Okay, and that's his path. And do you think your grandchildren will go the same way as him or the same way as you?
I don't know what is going to be a sensible career 30 years from now.
Who knows?
Who knows? You can't predict. And all I would say is I'm a big believer in it. You should always do something that you're passionate about. You'll do well.
And last but not least, as well as a former banker and a current investor, you're also an art collector. If I told you, you're always
jointly with my wife.
Jointly with your wife. Well, what sort of art do you appreciate? What's your?
We have quite eclectic in our taste. I mean, we have stuff. We started obviously collecting when we were in India, but we left India in '89 or '90, and subsequently lived in Hong Kong and then Singapore and then US and Middle East. So, and then when we travel to Africa again, we have picked up stuff from there. So it's very eclectic. We have Middle Eastern art, Indian art, Chinese, Asian, some African.
Do you personally goes around the auctions looking or
galleries? Yeah, galleries and auctions as well.
And do you see it as an investment or enjoyment?
I think it's passion. It's more passion. We haven't sold a single piece of work till now. So
really?
It doesn't really make sense. So therefore it's not an investment.
How many pieces do you have? I mean, out of interest.
I don't know, maybe 400, 500, I don't know.
Really?
Yeah.
And do you, I mean, who's an artist that you'd say is your person?
Too many. Too many. But my wife herself is an artist. I mean, she does pottery primarily. So yeah, so I have to say she's my favorite artist, I mean, just to be politically correct.
And as an investment, as a hard-headed banker and investor, what do you think about art these days? A lot of people say that it's worth more than perhaps money in the bank these days.
Look, I think there is, like everything else, there's a bit of froth in the market. And sometimes I don't understand why this artist is selling at X and the other one at 5X. We are big believers in buying what we like and not necessarily looking at the commercial potential or the mark-to-market of it. Sometimes you do well with that strategy, sometimes you do badly with that strategy, but if you're not marking it to market, it doesn't really matter.
So what do you want to be your legacy as a banker and investor? How do you want people to regard you in the years to come?
I always look at the years ahead, not the stuff behind us. So for me, the legacy, not just me, but my co-founders at Gateway want to leave behind, is that Gateway Partners becomes a go-to quality private equity house for Asia, Africa, Middle East. That's what we want to be. We want it to be a great place for people to invest, a great place for people to work, and a great place for people to for companies to raise capital from.
I'm afraid that's all we've got time for. From me, Chris Bishop, from deep in the heart of the financial district of Dubai, it's goodbye